Good morning, all, and welcome to the European crossover. And we've seen sustained weakness in the euro. I did get along that 925 area and still kept the position. If we go to new lows, then I'm out. Um, Now I have seen like a difference. I mean, even I was having to be up late in Asia, and the dollar Swiss was at that key area right below that 99.58, and it wasn't advancing past it, yet the euro dollar kept moving lower, obviously under pressure. So we'll have to see what comes of this. We did have a level of support at 882 with some major support at 869. But obviously we've had those Friday flows, and it's really weighed here on the euro. So we'll have to see how that plays out. I thought that the euro was pretty much well overdone and decent support there at that 925 with the possibility of a dip, as I put on that blog post, below 9, which we did get that dip, but considering how much we'd fallen from the intraday session after getting up there to 1038, I thought that pushing it this far was really overdone. But we'll see what happens. I mean, the dollar Swiss, like I said, we pointed out multiple times, is at 99.58. It's pretty key. I just don't see another extended leg beyond that area. I said we could rally them up there, and we actually got right up there pretty close in Asia. We did tick a little bit higher in Europe, but I just don't see what there would be an extended leg beyond that. So that's what I'm thinking. This area should ultimately end up holding, if nothing but just for a bounce back, in this case for the euro, or a pullback in the Swissy, although the euro has been far more weaker, relatively speaking, than the dollar Swiss has been stronger. And then I looked at the dollar yen that was not able to get past 430, and we pulled back all the way to 370. We're at 385 now. That has a little bit to do with the bonds got back up to 64.31. Now they're 64.21. That 64.24 is really key areas, so we'll see what happens there. So we're going to get into the news right now. Obviously got that here. The dollar was on course for its third consecutive week's gains against the basket of currencies used to measure its broader strength, driven by hardening expectations of rising interest rates. Well, we've already talked about this before. 2 weeks ago, everybody, his brother, sister, and uncle were saying the Fed has no credibility, they'll never raise, and here they flip all the way to the other side, and now it's hardening expectations. So in the euro, investors have never really got close to fully pricing a move. Short-term rates now put a 75% chance probability of the Fed raising official borrowing costs for the second time in more than a decade. After a blip in the first half of the week, Fed's William Dudley and Donald Trump's failure to register a big win in Wednesday's presidential debate has hardened that view, fueling another surge for the greenback, which is hilarious because the whole idea was if Trump was stronger, that was supposed to fuel a surge in the greenback. But now they say because he wasn't stronger, that fuels another surge for the greenback. So it kind of makes me laugh. Some of these people don't know what they're talking about. ECB Chief Mario Draghi questioning of speculation was already considered how to wind down bond purchases when the time has cooled any signs of recovery for the euro. The dollar rally appears to be back on after struggling at the start of the week, said Kathleen Brooks, Research Director of City Index in London. And like I said, I still expect the euro at 107 by December, as I had put that post last month. I just think that it's come too far. But obviously, price is truth, and it's a Friday, so they're going to push them. But at this point, the way I look at it, it's not like as if people were, staying long the dollar. Staying long the euro. It's been down the whole week, and then when we got that pop up yesterday, they quickly pushed it down. So I don't know that you've got anybody still left that has to go in and sell. That's my point. Why you'd see there's continued Friday flows. Although we saw that continue in Asia and certainly in the first part of European trading. But to me, it just seems like, even if you think the euro is going to go lower, I mean, I do overall, it just seems like people would say, okay, well, let me find an area to reshort it, and I'll wait for a bounce. But we'll see what happens. Like I said, obviously they're punching, back a little bit lower. Some analysts said that investors were again shifting towards carry trades that use expanding difference between interest rates on the dollar and those in other currencies to rack up profits. The euro was left bruised and battered after the October meeting, Credit Agricole said to its clients. We expect that the euro has also been dragged lower by its appeal as a funding currency at a time when the G10FX carry trade is staging a return. This is consistent with single currency having broken to new lows against the G10 yielding and commodity currencies recently. And it says, another reason for seeking the security of U.S. assets is the steady depreciation of China's yuan, which dropped to its lowest level in 6 years against the broadly stronger greenback. Sterling, whose 20% fall has been the biggest story of the past 3 months among the majors, was also back on the defensive in face of dollar strength. The language from European officials towards PMA's first summit since June did not augur well for the pound. French President Francois Hollande said if May wanted a hard Brexit, then negotiations should be very tough. Sterling edged down against the dollar on Friday, hurt by expectations that Britain's economy is likely to suffer from a hardline stance by the EU in negotiations on the country's exit from the bloc. PMA, who is in Brussels to attend the first EU summit since Britain voted to leave the bloc in June, tried to reassure EU leaders after Brexit, but was told by President Francois Hollande to prepare for tough talks. Sterling has fallen 20% since the June vote, with losses accelerating in the past few weeks after May raised the specter of a hard Brexit, where the government will negotiate for an exit that favors tighter immigration controls over free trade, likely curbing foreign investment needs to fund Britain's huge current account deficit. Investors started pricing the impact of a hard Brexit on the economy and the current account driven by the political stalemate between the UK and the rest of Europe. Sterling slightly sent inflation expectations soaring, driving investors to reassess the chance of further easing by the BOE. Has also led some analysts to say that foreign investors would demand an extra premium before buying gilts. So today we do have Canadian CPI, and then later on at 10 a.m. Eastern we have Eurozone consumer confidence. So nothing on tap here in the States. So once again, Canadian CPI, and the dollar CAD, it also reached a key level, which was at 32.56. So we've backed down a bit. I mean, obviously, like I said, the Euro's come back up just a hair, but just saying that it just seems that it's quite overdone if you look at the overall, as much as it's continued to fall. And I think that the bets have been placed, the way I look at it, the bets have been placed probably since yesterday for the extended move lower. I just think at this point then, once those bets have been placed, there's not really a whole lot more, although it's gone with those flows, for it to go at this point. We'll just have to see. Time will tell. So let's go on and move into the charts. And Amanda says, good morning, TGIF. Good morning, Amanda. Um, so here we are. I have this line going back from way, way back when, it's 882, so we can take a look at that. Right there. Which really, to be quite honest with you, isn't a lot to hang your hat on. But there it is, the 882. And here's where I have the bigger support, which is 869. And we got above 9, but we're starting to slide back down. We have those Friday flows. We're just going to have to see. I mean, I think it's, well overdone. I mean, we've broken out of this range, but like I said, the way I look at it could be the wrong take, but the way I look at it is we've had this big breakdown here, and it's continued lower. The way I look at it is those that were looking finally for an extended move lower have gone and placed their bets. So if they place their bets, that's what I think it allows then the euro to come back up. Potentially, it could probably get back up to about the 942 area here. I just think that we've dropped so much, and it wasn't, even here when we made this rally here, and I talked about the bias pivot of 1043, and it didn't even stay up there very long at all. I mean, it just quickly came back, and the modus operandi for the euro is, it'll come back and then start to, I didn't think it was going to rally and go to the moon, but come back up. So quickly faded and started to lose this 110. So fine, we started to go and break lower, and we worked lower, and then those that thought, okay, well, this thing's going to go a heck of a lot lower, have put in their orders for the medium term, and then at this point, I think there's not really a whole lot of selling left to do. We'll have to see. It's Friday, so no one wants to fight the flows. But to me, it just seems like we're somewhat stretched in here. So here we are on the 15-minute chart, and I mean, I gotta admit, there just hasn't been much of anything. I mean, it just continued to just drip lower and drip lower. Like I said, we do have those Friday flows, have this 881, which basically a number that's already been there. And we talked about the 882, but on the 15-minute, it's 881. My thought is, like I said, I think that the selling that had to be done has been done. The only thing I think that could be, continue to push us lower are these Friday flows. But this thing is no doubt having a very, very tough time trying to move higher. And maybe it won't be able to move higher until next week. The key will be, are we going to break to new lows again? If you look at the footprint down here, it's been pretty bearish. People just blasting out of any longs. Now here we've got the major support here at the top of the zone, this 869. I definitely don't want to see 869 because I'm out the door at that point. But that's where you have the most touches you would expect some decent support. And maybe they're going to try and drag them lower and take them down there for the rest of the session. But I think it's just pretty well overdone at this point. Which takes us here to the dollar Swiss, and we've discussed it several times this week. And you can see we came up to this 99.58. And my point yesterday was, we can rally them up. I think from a risk reward, you could actually take a shot at it. I mean, I'm looking for it to go in and pull back. But once again, you've got the Friday flow, so it's pretty hard to step in on a Friday and take the other side of the trade. But we've talked about the significance of this 99.58. I thought, okay, quite possibly maybe we could make a run towards it. I just don't see us being able to get beyond that and get a sustained move without a pullback. Then we did get a pullback yesterday at the high of that, and we came right to the bias pivot. You can see that here at the 98.44. We've talked about that on the way up. You see here, here, here. Broken, this would be the support. It actually stopped it, but that's what I'm saying is this is a very key area, this 99.58, and that's what it almost seems like the euro, it's in and of itself, because we were up here almost right there in Asia, because these are actually, I look at 2-hour charts, but these are 4-hour bars so that we could see this further out and see the significance of this 99.58. So it was already bumping up here in Asia. And we couldn't get past that 99.58, which was my take all along, was it can make it up there, because everybody Blake was saying, well, do you think it's a short here? And I go, well, no, it's not short here. I mean, we were talking yesterday, I go, but on a rally up, yeah, I think that you could take the other side of that, because can we make it up as high as 99.58? Well, I didn't think we'd make it up to right 9.58, but I thought we can make a run towards it, and then you would look for the market to go and fade back. So we were already up here, and and this is, even though the wick isn't very long, this would be a hanging man, especially if the wick was a little bit longer. But that was my take, is that can we go up there? Yeah, but I don't believe that we have the juice to get past here, because if you can get past 99.58, you're going to stop anybody out here that's against it, and that's going to open up the door, like I said, for 125. And I just don't see that at this time. Now, that being said, even though we weren't doing anything in Asia, we were just holding up there, but we just couldn't break out to new highs. The euro was going to new lows. But I think we're very stretched here on the dollar Swiss, and I've used that kind of, like I said, as a barometer to give me an idea of what's happening with the euro. I will say that over the course of the last week or so, maybe just a hair over a week, it hasn't corresponded the correlation has not been that closely. Most of the time the correlation shoots almost close to like 95%. I'd say this week is probably closer towards about like maybe 82% or something. I'm just throwing that out there. I'm saying it hasn't been as close as it's been. So I can take a little bit of a grain of salt here, but I still think, once again, with the dollar Swiss being in such a key area here, I just don't see where it has the juice to say, okay, now we're going to break higher. Because if you break this 99.58, it's air. That means you're going to zoom. And if you're going to zoom, then you need to get the hell out of the way. But if it's going to zoom, then we're going to 125. That's it right here, 125. So once again, you have to, even at this point, you have to tack on another 150 pips. So 150 pips here would say, okay, the euro is going to drop down to 750, and pretty quick. right here. Now I'm looking for 107 by December. That's December. But if you equate, like I said, they trade very closely, then you're basically calling for a move to 760 immediately. You're saying, okay, we're going to go to 760. Because if you break here in the dollar Swiss, there's not, look how key this is. You break here, there's air here, folks. Air. You're going to already surpass par. You're going to get to about par 60. It's all air. So your target would actually be around 101.25. I mean, if you think at this point there is 175 pips at this point, this was a take 175 pips for if we get past 99.58, the target's 175 pips higher. So once again, like I said, 175 pips from here takes us to 725 right there. I just don't see it right now. I'm saying as much as we've broken, I think that they're laying the groundwork for a move lower. I just don't see this going to happen right now. A dip, but I think we have to rally back up to offset some of the pressure, and then people will step in around maybe 963, 950 to try and put on shorts again. But I just don't see, I think that the selling was done here, and now that's been done. I just don't see that there's a whole lot at this point. We'll see, like I said, there's at heart with FNN used to say, well, knowing the fullness of time. So we've discussed the euro and the Swissy, and with the Swissy, I've basically noted, and you can see here's the Swissy on a 15-minute. I've noted, what I believe could be a little bit of divergence right in here, which is what I talked yesterday. Is I thought, okay, can it move higher? Yeah, it can move higher. I just don't think they can break past that. Well, we'll also take a look at the dollar yen, because the dollar yen, as strong as the dollar's been, it hasn't even come close to the 430. I mean, it's close, I'm saying, but getting ready to pop past that 430. We haven't done it, and we sold all the way down to the 360s. So we made up to, I guess, yes, it was closer, but I'm saying is, we made it up to look 421, and we sold off nearly 60 pips. So that's with the euro falling out of bed. And that's what I'm talking about, the divergence. So here's the euro completely fallen out of bed and continue to drop. I mean, we went to new lows 9.25, 20, in the teens, 9. We dropped all the way down here. So if I'm looking at that and all this awesome dollar strength, then we probably should have already got to 475 in the dollar yen. It's not enough on the dollar yen, I'm just saying is, so this would equate to probably about, at least in the 450s, if not around 475. Really, like I said, it should be like right in here, beyond, we should have been able to take out, there's a Tuesday highs. So we should be here, right there, about 490, almost at 5. Because if you look, once again, relatively speaking, here's the euro, and we've got past the 950, remember? We got past that 950 to the 940s. So from 940, and I'm not saying it's pip for pip, but I'm just saying relatively speaking. So from 940 to 880, okay, that's 60 pips, okay? So let's look where the dollar yen was with its high, which was this last Tuesday. And we got to 462. So it's not pip for pip, but 80 pips takes us to 540. Now 540, I'd say this, that's a pretty good stretch. But then again, like I said, if you've seen all this massive dollar strength, that's not too far. That's not way out of the league, which is right in here, 540, right there. But we should at least be at 490. You see what I'm saying? And we're actually 110 pips from where the euro is at, relatively speaking, to right here. You see what I'm saying? Where the euro's at, we should have been able to blast up to about 490. We can't even take out 430. And besides that, we sold off 60 pips. You can say, well, that's just the dollar yen. There's a lot of reasons why, blah, blah, blah. Well, once again, like I said, here's the dollar Swiss. We broke it and broken some key major area here for the euro. So the dollar Swiss should be, even if it doesn't blow, blowing and going, it probably should be around 99.75. You see what I'm saying? So you're starting to see that divergence. Now, the euro isn't rallying right now. The selling seems to have quelled, but that's what I mean why I think it's really overdone. We'll go and take a look here at the dollar CAD before we go on break. The dollar CAD has come back. This, like I said, this has been a real strange pair overall when you think about, I mean, it maintained a good solid bid, and then basically it's just been going south big time until we got, like I said, right here, we got this nice reversal here, and that has allowed the dollar CAD to continue to go in advance. We have come into a key area 32.56. The dollar CAD, I won't hold it to the same test as it would the Swissy and the dollar yen, because the dollar CAD's been under pressure the whole time. And you could say, well, it probably should already be up at 33.10. Yeah, but look where it's come back from. Now, obviously, this has a lot to do with the Canadian economy itself. But when you look at it, I'm thinking, well, it is into a key area here, but it's come back a long way. It really has. So I won't say, well, this should be a whole lot higher. Well, it has had a nice rally, but the dollar CAD is not essentially a marker. That you want to say, wow, that's going to determine what's happening. I've questioned here where it was, like I said, it just wasn't able to hold its bid. And I'm saying, well, that isn't good, because it's been having an underlying bid tone. So for the past over a week, was sliding. So we've seen a nice reversal to come back. But the ones that you're going to look at when you're thinking of dollar strength overall is going to be the dollar Swiss and the dollar yen. Because if you're seeing good dollar strength, that should be reflected in the dollar yen. The dollar Swiss is basically trading right there with dollar strength. But if you want to say, well, I see good dollar strength, that means I should be, what market should I be that's going to, this is reflecting the immediate dollar strength at the moment, immediate dollar strength. So what market would I be going into if I'm thinking, wow, I see dollar strength on the horizon? It's happening right now. Well, that would be the dollar yen. But the dollar yen, we're not even able to take out the 430. When, like I said, if you look at what the euro's done, the dollar yen should have already made a run up here, closer towards 540. And at the very least, it should have already been here at 46, at the 490. Well, we're not even able to take out the highs here at 430. And you'd say, well, it's still holding up relatively well from that area. Well, it actually fell nearly 60 pips from that area. So that's what I'm saying is, that's what I believe, relatively speaking, why I believe the euro is really well overdone. Maybe we'll see that bounce back here in the euro session. I don't know. We get those Friday flows and it's hard to take the other side. I just think that the euro is, they've hammered it good. I just don't see if there's another leg down at this moment, although this is exactly what it's been doing, despite the dollar Swiss stalling in this 99.58. It's continued to weigh on the euro. Okay, everybody, and welcome back to the crossover. So we've gone and covered the euro and the Swissy and the dollar yen, as well as the dollar CAD. We'll go and take a look here with the gold market. And we were talking about previously over the course of the week of what Draghi might, indicate, which obviously the biggest concern was the ratcheting back or reining in of QE. And no one really expected that to be correct. And the thought was, do you want to be long gold going into the ECB? We did want to get a rally. Now, even though Draghi may have refuted that, the rally quickly ran out of steam. Obviously, I think a lot of it had to do more so with the euro, which was selling off. So we quickly lost that. We had this 75 area here on the 2-hour chart, which is really where it ran out of gas. I mean, it got a hair above it, but quickly ran out of gas. We had that buy signal. Now we've flipped over to the sell signal. And the thought was, hey, if we do get a rally, if they were to definitively state they're extended beyond 2017 March for QE, that would have got us to the thoughts were that would have got us to the 1294, the 38%. We didn't get that, and then obviously, like I said, the dollar started strengthening rather quickly. And so at this point now, it looks, as I was mentioned previously, is we'll eventually probably going to go sub 1250. And actually, if you look at this rally, a little bit late now. I mean, I'm not late, but I'm saying is at this point, I think people are going to think, okay, well, we're going sub 1250. Okay, so over time, maybe not today or tomorrow, but over time, we should be able to test the 1250 because this rally you would expect a little bit more. Even under, by him just simply refuting it, I thought that opened the door for us to go into the 80s, maybe even as high as 89. He did go and do that, but obviously the dollar strength or the euro selling off had an immediate impact where gold started going to lose its luster immediately. And I think that at this point, because of that lackluster rally, I think people will be looking towards, once again, the retest of 1250. And that'll probably open the door right now for 39. Like I said, I think in order for them to avoid the 39, they would have had to have definitively stated, okay, we're extended beyond March 2017 on the QE. That relief rally would have taken us up here. The conventional wisdom was it would have taken us up here to 94, the 38%. I think that would have been reasonable. We could even have shot past the 96, maybe even make it up here towards 98. But he did refute it somewhat, but like I said, despite the favorable technical picture for gold, the sell-off in the euro, i.e. dollar strength, immediately weighed on the gold market. So the gold, as of recent, hasn't necessarily traded off of the euro. And at times, it's ignored any dollar strength. You can see that here. Even when the euro was weak, if you think about this, even when the euro was weaker during the week, gold was in a buy mode and it was still rallying. Okay? So you think about this, it was in a favorable technical picture. It had the momentum going their way. So we should have at least been able to go into the 80s. Maybe even make it like at least, if not make it above 80 or at 80, we should have gotten up and probably pushed it almost to 80, maybe like 78 and change or something like that. So the thought that immediately we sold off as soon as we saw the dollar strength, when early in the week it was ignoring the dollar strength, okay? So it gives you an idea that this rally that they've had, there isn't a lot of legs behind it. And I think traders were just looking for that opportunity where, although it didn't seem likely at the time where Draghi was going to definitively state that they're extending beyond that, but they thought, well, just him refuting that is going to be enough to, get a little extra juice. And we just simply didn't see it here in the gold market. So with this sell-off coming on the heels of dollar strength when early in the week when there was dollar strength, the gold market didn't care. I mean, I'm talking about as far as the euro. The euro was continuing to be under pressure during the week, and gold didn't care. Gold's rallying. But yesterday, when the euro caved in and then the dollar's moving higher, then all of a sudden it's not as if the market started to turn, it couldn't hold, and then it started to fall. I mean, it's almost immediately, it just starts fading. I think we're a little bit overdone in the gold at this point. We did come into this bias pivot, the 63. You can see where that held. But I think any rallies back, they're going to be looking to sell this gold market with the idea that we're going to retest 1250. Like, I think that's where you have to go and look at this. And for starters, I think it's going to be the 69 area. We can go and move into the 15-minute chart on that. So this is what I'm coming up with, the 69. If you look on the 4-hour chart, I mean the 2-hour chart I was sharing with you, you can see where I was pointing. You can see the level there, the 68. But that's not what I'm looking at. One of the guys was asking me today, well, where's the levels to short gold? I think gold was down here. Sure as hell ain't here. You know what I mean? After this big fall. But I said, you know what? Not until 69. And we'll even mark this off in a dotted line just for a little extra emphasis. Yeah, I think gold's going to go down to, it's going to test 1250. But once again, just like I thought the euro was overdone, but you know what? It's still very, very, very weak. I don't think we're going to see 1250 today. You see what I'm saying? So, you know, when the gentleman was asking me where the levels, obviously he wasn't meaning immediately right here. But I'm saying is there's nothing, not till 69. Then you can look at it at 69. And you can look at the range right now on a day trade basis. I'd probably say like 61% would be the earliest. So we'll see where 61% comes in. Actually, 61% comes in at 70.50. And 69 would be the 50% of the range from yesterday's highs to this morning's lows. And the euro continues to remain under pressure. And we know about those Friday flows. So, you know, like I said, I think it's way overdone, but it is what it is. And as the saying goes, price is truth. But I got long at 925. I think it's, like I said, way overdone. I'm talking about the euro. Now, like I said, we looked at it earlier with the, you know, looking at, relatively speaking, the dollar Swiss and the dollar yen. But the pressure's there. I mean, obviously the tone, just like we like to look at the story, the tone was now is that supposedly now they're back on the funding kick. I mean, obviously this stuff always comes out after the fact. I mean, like I said, now they talked about the hard strengthening of the interest rate. You know, the idea that the U.S. is going to raise rates. Well, 2 weeks ago, everybody was saying the Fed had no credibility, they're not going to raise, and now the story says the hard strengthening of the idea that they're going to raise rates. And then, of course, after the fact, well, now they're looking at it as a funding currency because the Aussie has been so strong, and we're seeing these differentials. So, I mean, like I said, it's just whatever's going to go in and feed the thought at that time, but I'm saying it is what it is. That's what they're looking at. It's pretty hard to get a rally in the euro on a Friday when that's the way it's breaking. Although I will state is that I don't think anyone's been long the euro. I'm saying from way up, and those that got long yesterday, I'm talking about on the initial run-up, have already been run out of Dodge. So what we can take a look at, obviously we've looked at the dollar yen, we can take a look at the bonds to see, because we know the bonds do impact the dollar yen. My whole point with the dollar yen was, hey, look, the dollar yen, when you look at the dollar, when you think of dollar strength, you go right to the dollar yen. If you're seeing dollar strength, you're thinking, what market is going to benefit from dollar strength? And there it is. And we're just not seeing that. We've seen the euro dollar yen go higher, but there's no way in heck that the dollar yen should be down here. When you look at, let's say, the dollar Swiss up here, the euro down here, the dollar yen should be, like I said, when we looked at it, if you were to compare it to the euro, should be at 540, or should have got a high 540. At the very least, we should be close to around 490. I'm not saying it would have been right at 490, but we should have been able to tag 490. We couldn't even take out 430. That's what I'm saying is, so it just seems like the euro is just, it's under pressure from those Friday flows, but I think it's just overdone here. But we'll take a look at the bonds. We're back into this area here in the bonds, the 64.24. We've talked about that, the key area. And obviously when the bonds got up here to 65.06, that was actually the high. It's certainly going to weigh on dollar yen because of the interest rate play. And we've slid back, we slid back here. So as it slid back here, and the dollar yen's lately been responding to when the bonds come off, that was my point, is the dollar yen should have made it up to, potentially up to 540. At the very least, should have been above that 485. Doesn't mean it should be at the high at 485 now, but we should probably be holding around 440, 450. We're actually at 373. We're about 6 pips off the lows. I mean, where does that, how does that make sense? You see what I'm saying? And I could see if the bonds were at 65.22, that's it. Well, that's it. You see what I'm saying? So I'm thinking, wait a minute, there's dollar strength. Why isn't the dollar yen responding? You see what I'm saying? So it still plays into that. We'll see what happens on that. As far as the SPOOs, my whole take was mentioned some guys. I thought that I thought it was going to be supported going into the ECB, and then once we got past the ECB, we would see a reasonable correction in the SPOOs, and I still think that's going to be the case. We'll see a reasonable correction here in the SPOOs. I thought with the ECB they'd be able to punch them up a little bit higher, and then from there we start heading south. But the punch up wasn't even very much, and it's not like we've had a dramatic sell-off, but I just think that the market is now going to look to ratchet down. The whole idea is, one of the things was that if Trump was going to be the one who probably was leading, then the SPOOs are going to be in trouble. So we've had decent rallies, not only to say rallies, but decent moves up, with the idea that Clinton was going to, we wouldn't have, the whole idea is because Trump's trade policies, that was going to scare the market, okay? So to me it looks like we've wrung the towel as much as we can, and at this point, I just think that we're just going to go and start to slide now. So we're going to move back into the main charts. And we'll go and take a look at the crude oil market here. And to me, I think this market's been all over the place. And I just, like I said before, I just don't have a good take on what this market is doing. I think there are plays intraday, and we did get up here, and I guess, I didn't watch it closely. I guess you could say right here, this was a hanging man, although the body is a little bit longer than it could, but if you look at it, not bad. Although with this close, you could take it out some key resistance. So you take out the key resistance, and what does the crude oil do? It starts going south of the border. And that's what I'm saying. It's either one day it's going to be going up, the next day it's going to be going down, up, then down, you know what I'm saying? Like, we broke out a key area right here. And I think it fooled a lot of people. I was looking on, this is on Bloomberg, this is about, well over a week ago. And they're talking potentially for a golden cross. And you get this run up here, it looked pretty good to me. I'm thinking is that those people were going to be getting long. And look what the market does, just turn around and reverse. After breaking out into key resistance, turn around and goes the other direction. And that's what I'm saying is, other than an intraday play, I just don't see where you have a whole lot here with the crude oil market. The last market that I would look at would be here with the Aussie dollar. We had that run up here, and we were talking. We were talking about. Blake was saying he got short up here, and I was saying I don't think anybody's going to. He's safe there because no one's going to touch that. And we talked about this area potentially the way we're setting it up, almost being like a head and shoulders. The left shoulder, the head. This didn't even form before the market broke. Obviously, it broke on this dollar strength. The next area right here for any decent support is going to come here around the 76. We have this zone here. I think we can get rid of this here. But it's probably going to come as we test the 76, which isn't a whole lot further away. And Blake should be popping in right now. But they have not even been able to come close. And I don't think, like I said, any moves up there, they're going to go and take the other side.